Hi guys, it's me Habib Mahmoud. Today we're going to talk about how the stock market works. Well, previously I made a videos on why stock market is important and what is the stock market. So if you haven't checked that video, there will be a link upside somewhere. So you just click that and watch that video first so that you will understand the importance of the stock markets and what is it exactly. So now we're going to talk about how the stock market works. Okay, so what are we're going to talk about the IPO process. What are going to talk about the reason behind the movement of the price, why the price go up, why the price go down, and multiple reasons. Okay, and why and how these things happens and how things work. And it will be a detailed video, so let's get started. Okay. Okay guys, so now we're going to talk about how stock market works. So now, first of all, before I just go into advanced explanations, I want to let you know that the process of a stock market. Okay, how a particular company get listed in the market and the price being traded and people buy and sell, how the process happens. Like companies go to the exchange and they list their companies in the exchange and their stock trade on the exchange, how this happens. Okay, so first of all, I'm going to start with an IPO. Okay, so IPO is a full form of the IPO is the initial public offering. It's a process where a new company or any companies, they come to the stock market to list their stake for the first time. Okay, so that's why we call it initial public offering. Okay, whenever a new companies want to get into the market, okay, list their stock, okay, list their shares to the market, there's a process called IPO. So this is what I mean by IPO is. Okay, so I'm going to explain in detail how the IPO process works. Okay, so so right here you can see initial public offering, how does it works. Okay, so I'm going to explain you that how does this work. All right, so let me just, okay, now here you can see it. Here's a firm, an IPO firm. Okay, let's imagine a company that wanted to list their shares to the market so that investors can buy the sell the price, and price goes up and down depending on the company's fundamentals. All right, so first of all, when a firm want to list their shares, first they go to an investment bank. Okay, so I want to so what's exactly this means, that when a company wants to list their shares, first of all they will go to a investment bank. Okay, investment bank is the one, they're going to set the price of the shares. They're the one who going to bring the investors on board. They're the one who going to market the shares of their companies. Okay, so they are the one who going to arrange everything from the beginning to the end process. Okay, so what does exactly the role of the investment bankers in an IPO process? So here is it. Okay, what's exactly the role of that? It will be, you can see it here. Now the role of the investment bank in the IPO process is basically, whenever a company wants to list their shares in the market, they go to the investment bank, and investment bankers are the one who provide them the advice, provide them the guidance regarding the valuations, regarding the price, regarding the timing of the IPOs. They're the one who going to conduct the due diligence. They're going to check the companies. They're going to check the credibility of their companies, whether all the data, all the information they're providing are accurate or not. And they're the also one who going to determine the price, exactly what price should they list the company's stock. Okay, they are the one who going to decide it. Okay, they are the one who going to manage the sales of the shares. They are the one who going to sell the shares to the investors. Okay, and they provide after payment support. So basically, if any company wants to list their shares in the market, first of all they need investment bankers. Investment bankers are the one who going to help them in giving them the guidance, advice, conducting the due diligence, setting a price which is suitable for the investors. Okay, and also marketing the shares to the investors, so the investor buy the stock and it get good listings. Right, so there is a process of there is the role of the investment banker in IPO. Alright guys, here we are again. So now what happens basically here, so the IPO companies who want to go to the IPO, who want to list their shares, they first of all goes to the investment bankers. Okay, investment bankers, the one who want to decide the price. They're going to decide they're going to do the due diligence. They're going to market the stocks of the companies to investors. They have an access to the institutional investors. They have access to the high net worth individuals. They have access to investors. So basically what happens here, the IPO firms will give their shares to the investment bankers. Investment bankers will give these shares to the investors, IP investors, sorry, IP investors. So once the investor likes the stock, they're gonna pay the value of their stocks, and the investment bankers will give this money to the company, right? So company gets the money. So this is the basically the IPO process. Okay, the firms go to the investment bankers will decide the price, and they will market this price and the stock to the investors, and investors buy the stock, and the money goes to the firm. Now once this happens, once it's done, what happens next is that that particular stock is going to trade in the on the exchange. Okay, you can see here, going to trade the shares traded on the exchange. The stock which has been which bought the IPO will be available on the stock exchange, stock market of that country, right? So once investors have bought the shares, like here they have bought the IPO shares from the investment banker. Now if they, in case if they want to sell the shares, okay, or in case they want to buy more shares, they will go to the stock exchange and they're going to buy it or they're going to sell it depending on their choice. Okay, so this is basically the process of an IPO, right? So I hope you understand that. Okay, that just a lot of companies who are listed on the IPO price and they're below right now, trading below the IPO price. Okay, and why I'm saying this, because don't think that whenever a company is getting a good listing price, so okay, like what I mean by good listing price is that if if the investment banker decide the price for a particular stock for $10, and once they list on this exchange, they trade $12, $15, $20. So don't expect that, oh, it's good stock, we should go and buy it, we should go and sell it. This kind of like way of investing is like, it's not the right way. Okay, so I just want to give you a few examples that there's a lot of stocks which had a good IPO price, but now they're below the IPO price level, and there's some stock who are above the IPO levels. Okay, price. Okay, so I'm going to share that to you now. Okay guys, here you can see it, this stock price. If you see the stock, it is started trading, the IPO price was around $62, and it went up massively. Okay, during the pandemic, when everything become online, so people start to go to the Zoom, even schools started in the Zoom, companies meetings has been happening in the Zoom. So from the IPO price, it went to around $400 to $500. It went to $500. Okay, after the pandemic's over, the price crashed, and now it's below the IPO level, which is $60 to $54. So you can see that price can be volatile, extremely volatile. Price, like from the IPO, it can it can go to below the IPO level. Okay, this another examples here. This is a stock price of a Coinbase, and I remember when there was an IPO about the Coinbase, I was watching the price, and it was like so hyped up, and I remember the same day the price touched around like $400. Okay, an IPO, it was a massive, very good an IPO, like listings, was great listing. But you can see right now, whatever the listing price, it doesn't matter if the fundamental is not okay, it price will crash, and now the price is trading around 247. So it's like completely below the IPO level. Okay, I can give you another example where the particular stocks is performed very well and it's above the IPO level. Like you can see example of Zomato is an Indian company, it's an Indian food service. Okay, they deliver foods. Okay, when it started this level of an IPO price, and it crashed because during the 2022 bear market, but now it's above the IPO level, which is a great, because there's a lot of improvement fundamentally on that particular companies. That's the reason the price has been above the IPO level. Okay, just another example I can give, like a Duolingo is a language software or an applications where you learn different languages. They have a different way of teaching people different languages. So it's a kind of a good app. So you can see the price of that, the IPO price, the beginning price is around 130, but now it crashed, but now it's above completely and above that price, above the IPO price, or exactly on the same. And most probably, if the fundamental improve, the company can go higher further. So you have to understand the fundamentals behind it. Okay, so whatever I have shown you so far is that price can go up and down, price can be extremely volatile, price can go from above the IPO level or below the IPO level. So the question exactly is that what makes the price moves up and down? What are the factors behind the price going up and down? Okay, technically the reason of a price going up and down is a supply and demand. Okay, When supply is higher, okay, and demand is lower, price goes down. When demand is higher, supply is less, price goes up. This is a technical reason, but we have to understand the factor behind the supply and demand. Okay, the reason, what are the forces that affect the supply and demand. Okay, so we're going to discuss that. Now you can see the price goes up and down depending on the multiple scenarios. Okay, like in central banks, they might give some kind of interest rate news or something that might impact the price of that particular stock. Government, sometimes they're going to bring some kind of a policies, they're going to impact few companies, few stocks. Okay, that there will be huge supply of their stock because people don't want to buy. Inflation news can be happening, earnings, fundamental earnings, about if companies are not making enough profit, then the demand for that particular stock will go down. Management issues, product innovations, or products having issues in products can make the demand for that particular stock up and down. Sentiments, of course, overall market sentiments can be also impact during the war. If there's a war in Ukraine, in war in different countries, okay, so for some particular industries, this kind of news can impact them. Something like a good or bad news can also impact the stock demand of the stock prices. Economic news, GDP's news can also impact the demand or supply of the particular stock. All right, so now we need to understand that. I'm going to explain you, okay, what, like, example of like a news, sentiment, and a product. I'm going to give you a scenario or hypothetical example how this sentiment change, how the demand and supply works in a different way. Okay, I have a few of the footage that I have taken from a TED video. It's a very good videos, and I'm gonna put the video link in the descriptions. It explains in animated videos how stock market works. So I'm going to put the link descriptions. If you watch that video, you can understand a better way. I will go and explain my own way. So I'm giving you a hypothetical scenario how stock market works. All right, so let's example, say there is a company, like you started a coffee company. Okay, so now you went to the investors and you are promoting your companies. You are telling them that this is my companies, I want to raise capital. Okay, give me the capitals so that my company can grow, your investors can make profit. So investors like the pitch, they're going to give the money to the managements. Okay, and see, and the price is listed on the stock market. Okay, so like basically this is an IPO process happened, right? So the stock market on the listed on the market, and start the demand for that the stocks increase. You can see here from 94 cents it went to 98. People start to buy, demands are increasing, everyone's buying. Okay, it's good time. Now you can see that customers are buying the products. Okay, the fundamentally the business are doing great. Okay, because they have raised money, they have innovated the product from coffee to juice to ice cream, a lot of things are happening great. Okay, so suddenly there's a problem. Okay, which is quality problems, quality control. The company's quality control is not good. Okay, there's a lot of issues. People are having a problem with the food poisonings, they are finding a rat in the food. So this is a bad news for the company. Right, so the investors who are holding this, they have seen this news. Okay, they are seeing the news and they're afraid. They're like, okay, the stock that I'm holding, it is having a bad image in the market. The news is not good about the market. Definitely the stock of that particular companies going to go down, because investors will sell. Okay, supply will be more in the market. Okay, and demand will be less, price will go down. So what investors will do when they see the news, they're going to try to sell their shares. Okay, they say, I want to sell my shares, I want to sell my shares. So they want to sell before the price go further down more. Okay, so they sell it and they will get out and they will make money out of it. Okay, how much they have made it. But imagine this scenario is happening in a large volume. Okay, so what happens is people start to sell, demand goes down. Right, so you can see here exactly what's happening here. Okay, now from here price went down because of that situations. So, and price has been trading here for a while. This situation can happen. All right, so what we have learned here, okay, how does market works is all depending on the supply and demand for that particular stocks, and the effect of that supply and demand, what impacting the supply and demands are the multiple reasons: bad news, management issues, leadership issues, quality problems, products, and all a lot of things, economical problems, economic news, government policies, things that there are multiple factors that affect, that impact the supply and demand. Like in these scenarios, we have seen that, okay, the companies are doing good, business are doing great, the coffee is good, customer love the coffee, but suddenly there's a news that there is a lot of quality issues in that product. Okay, the product is not healthy, there's a lot of things they have been found which not supposed to be found in that product. So this news comes out, investors got panicked, they start to sell. Okay, once they sell, okay, the price of that the shares goes ups, and the demand goes down, and price goes down further. So there's also other technical things I want to explain that, okay, uh, about the supply and demand. Okay, and I'm going to make another videos on this. So I hope you guys like this video. Okay, and this video is informative, and I'm going to make more further videos on about the technical behind it, like bid and ask price, how price goes up and down. Okay, exactly in technical way. This is just a scenario based I made the video, and I hope you guys liked it. And if you like this, you can just subscribe to the channel and let me know what kind of videos you want further. I'm going to make it, and there's a lot of videos coming up. So thank you for watching. Subscribe and like. See you. Bye.